Well, we have 3 exit doors here. It's from my left and towards your right, as you can see. Well, a very, very warm welcome to each one of you present here to the 3rd Finance and Insurance Summit 2024. Can we have huge shout out everyone out here? I am Rashika Pradhan and I will be your host all throughout this summit. Well, the FADA Finance and Insurance Summit has assembled the brightest minds from banking and insurance sector to discuss on various rising topics of interest. And the summit's objective is to unite industry leaders on a single platform to explore future trends and deliberate on reshaping vehicle finance and insurance business during challenging times. And now, I would like to welcome our guests of honors with huge warm claps. Dr. Venkatraman Anantha Nageswaran, Chief Economic Advisor, Government of India. He will be joining us live in the session. Can we have huge shout out everyone out here? Mr. Ramesh Iyer, Director, Finance Industry Development Council, FIDC. Mr. Rajan Pental, Executive Director, Yes Bank. President FADA, Mr. Manish Singhania. Can we have huge shout out? Secretary FADA, Mr. Sai Girdhar, and Treasurer FADA, Mr. Amar, Jatin, Sheth, and distinguished guests and dealer friends. Well, now's the time I request all of you to kindly stand up for the national anthem.
नायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे.
Well, I request all of you to kindly settle down. And yes, now's the time when we do the lighting of the lamp. And for lighting of the lamp, I would like to invite dignitaries on stage. Please help me in welcoming Mr. Ramesh Iyer, Director of Finance Industry Development Council, FIDC. Mr. Rajan Pental, Executive Director, Yes Bank. President FADA, Mr. Manish Singhania, Secretary FADA, Mr. Sai Girdhar, Treasurer FADA, Mr. Amar Jatin, State Chairperson, Mr. Sachin Mahajan, and Mr. Sahara, CEO FADA, to kindly come forward for lighting of the lamp.
चढ़ायो अच्छा गजमुख को जोन दिल लाल विराजे सुत गौरी हर को हाथ लिए गुड़ लड्डू साई सुरवर को महिमा कहे न जाए लागत हूँ पद को जय देव जय देव जय जय जी गणराज विद्या सुखदाता धन्य तुम्हारो दर्शन मेरा मन रमता जय देव जय देव. भाव भगति से कोई शरणागत आवे, संतति संपत्ति सब ही भरपूर पावे। ऐसे तुम महाराज मोको अति भावे, गोसावी नंदन निच दिन गुण गावे। जय देव जय देव, जय जय जी गणराज विद्या सुखदाता, धन्य तुम्हारो दर्शन मेरा मन रमता। जय देव जय देव। चरण डोळ्यान पाहिन रूप तुझे, प्रेमे अलंगिन आनंदे पूजन भावे वाळिन म्हणे नामा। त्वमेव माता पिता त्वमेव, त्वमेव बंधुश्च सखा त्वमेव, त्वमेव विद्या तरुणं त्वमेव, त्वमेव सर्वं मम देव देव। कायेन वाचा मनसेन्द्रियैर्वा बुद्ध्यात्मना वा प्रकृति स्वभावात् करोमि यद्यत् सकलं परस्मै नारायणायति समर्पयामि। अच्युतं केशवं रामनारायणं कृष्ण दामोदरं वासुदेवं हरि गिरिधरं माधवं गोपिकावल्लभं जानकी नायकं रामचन्द्रं भजे। हरे राम 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 हरे हरे, हरे कृष्ण 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 हरे हरे, हरे राम 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 हरे हरे, हरे कृष्ण 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 हरे हरे, हरे
Can we please have huge round of applause, everyone out here? Thank you so much. And thank you so much to all our guests of honors for joining us on stage for lighting of the lamp. Well, I would like to request Mr. Ramesh Iyer, Mr. Rajan Pental, Mr. Manish Raj, Mr. Sai Giridhar, Mr. Amar Jatin Seth to be seated on the dais. And right now is the time I would like to request Mr. Singhania, Mr. Giridhar and Mr. Seth to jointly welcome the distinguished guests on the dais with the green welcome gesture. Can we have huge warm claps? Well, the guests are going to be welcomed with a certificate instead of a traditional bouquet, signifying the planting of a thicket of 11 trees on their behalf through our partner, Give Me Trees Trust. Can we have huge round of applauses? Well, thunderous applauses, everyone. Thank you so much. Well, now I would like to request Mr. Amar Jatin Seth to present the welcome address. Can we have thunderous applauses, everyone out here? Thank you.
Thank you, Rasika. Ladies and gentlemen, good afternoon and a very warm welcome. A special thank you to our guests of honors today, the Chief Economic Advisor of India, Mr. V. Anantha Nageswaran, Executive Director of Yes Bank, Mr. Rajan Pental, the FIDC head, Mr. Ramesh Iyer. Thank you all for being here today. My colleagues on the dais, the President FADA, Mr. Manish Singhania, and our Secretary, Mr. Sai Giridhar. So while we welcome you to this third Finance and Insurance Summit, where we converge to explore the fascinating realms of finance and insurance within the vibrant automotive landscape of India. It's truly a privilege to stand before such a distinguished gathering of industry leaders, each of you playing a pivotal role in shaping the future of automotive transactions in our country. As we gather here today, it's impossible to ignore the remarkable growth that the Indian automotive market has achieved. India is now the fourth largest automotive market in the world, with over 4 million passenger vehicles sold in 2023. This exponential growth not only underscores the immense potential of the industry, but also highlights the pivotal role of finance and insurance in driving this momentum forward. Finance and insurance are the cornerstones of every automotive transaction, offering customers the means to transform their aspirations into reality while safeguarding their investments. In a country as diverse as ours, these services play an even more crucial role in bridging the gap between aspiration and accessibility. Auto loans in India have surged to over 2.2 trillion in 2023, marking a significant uptick in the consumer confidence and purchasing power. Behind these numbers lie the countless stories of dreams, journeys fulfilled, milestones achieved, each made possible through the seamless integration of finance and insurance into the automotive ecosystem. While this is the landscape of opportunity, challenges are abound too. From the ever-evolving regulatory frameworks to shifting consumer preferences and the ever-present specter of uncertainty. Navigating the waters of finance and insurance requires not only just agility, but also foresight and innovation. Today, as we convene in this conference, we have a unique opportunity to exchange ideas, share insights, and chart a course towards a future where finance and insurance not only meet but exceed the expectations of our customers. From expert panels dissecting industry trends to interactive workshops exploring cutting-edge solutions, there is something in today's conclave for everyone. So I urge each one of you to seize this opportunity to engage with your peers and embrace on the spirit of collaboration and innovation that defines our industry. Friends, how did you think of my speech till now? I didn't write it, nor did Saharsh. It was written by ChatGPT, and it took 3 seconds to write whatever was written till now. The point I'm trying to make is that the world is challenging, and it's changing faster than what we think. In a landscape where change is the only constant, it's imperative for us to stay ahead of this curve, to anticipate the customer's needs before they arise, to embrace innovation as the driving force behind our success. The auto industry has remained almost the same since the first car was sold. We have been selling through showrooms, we have been servicing through workshops, calling back our customers. We need to change if we want to remain relevant. And the greatest change, I believe, will come in finance and insurance, which will be a driving force for all of us. We need to leverage data analytics to tailor financial solutions, harnessing the power of digital platforms to enhance the customer journey or nurture a culture of continuous improvement within our organizations. The possibilities are totally limitless. With two-wheelers expected to reach 40 million units by 2030, financing for them is expected to reach at least 2 lakh crores, and penetration is expected to reach 45%. It provides a great opportunity. India's GDP, we are expecting the auto segment to contribute 10% of the GDP by 2030. Of course, there will be natural vehicle adoption in our country, which currently is very low. But there also will be schemes, there will be offers, there will be innovations that will make vehicle ownership simpler and more secure. This will be driven by finance and insurance. I foresee a radical shift in the ownership cycle, with our customers willing to experiment with new age structuring products where they can buy vehicles of segments they aspire to, much more simply and easily. Behind each of these transactions lies an opportunity for all of us, automotive dealers. Those dealers who have kept their data well, correctly, and mapping it to be used for the future will certainly benefit more than the others. Finally, AI will work on the data that you provide. It's important that we know what is the EMI that your customers are paying, when is their loan going to get over, what is the down payment that they had made. Only on that data will you be able to upsell or give some other offers. And guys, the customer is ours. Whatever the OEM says, whatever the finance company says, whatever the insurance says, we have to own the customer and we have to make him grow through our network. So I urge each one of you to make the most of this opportunity today to engage with your peers and share your insights and leave here inspired and empowered to make a difference. Together, let's pave the way for a future where finance and insurance not only facilitate the transactions, but also elevate the experiences and grow the market for us. Every interaction is such an opportunity. Today, we have an action-packed day where post this inaugural session, there will be panel discussions on key issues in finance and insurance, followed by a session by Vedanta Academy on how to balance success and happiness. Post that, we will have the awards for the finance and insurance companies, which have been, they have filled up surveys that all of you did in the dealer satisfaction. So this is the first time that we had this survey, and I think we've got remarkable results. This will be followed by the Dealer Excellence Award ceremony. And I would like to thank the elite jury of Hormuz Sorabji, Mr. Arun Malhotra, Mr. Ramesh Iyer, Mr. Manohar Bhatt, Mr. Girish Mirchandani, and Hemal Thakkar, who have worked to judge these awards. And I would also thank the Premonacia team of Rahul Sharma and Shobhit Verma for burning the midnight oil and collating all this data quickly and facilitating the survey to give us the results here. Thank you all for being here, and now let's get on with the program. Jai Hind.
Well, thank you so much, Mr. Amar Jatin Seth, for sharing your wonderful, warm and welcoming address, which was also very honest. Thank you. Well, right now is the time for us to witness something very new, because our next guest of honor, Dr. Venkatraman Anantha Nageswaran, Chief Economic Advisor, Government of India, is going to address this August gathering through a live session. In spite of his busy schedule, he has still decided to come live and give his address. We would like to thank him immensely. Can we have a huge round of applause, everyone out here? And right now, requesting him to address us all.
FADA, Mr. Damani, other office bearers, automobile dealers from all over the country who have assembled in Mumbai for this annual national level conference on the Finance and Insurance Summit of FADA. It is my pleasure to share my thoughts with you on this very important occasion, prestigious event for FADA. I apologize for not being present in person. As you all know, the elections are over. The new government has taken charge. So has the finance minister. Preparations for the next budget and economic survey are in full swing. Therefore, given these circumstances, I am unable to be present with you in person. As you all know, especially as I am receiving the monthly FADA newsletters on sale of automobiles, two-wheelers, three-wheelers, passenger cars, tractors, etc., it is very clear that the Indian consumer, whether he or she is in rural India or in urban India, is willing to and able to spend, even though in one or two categories, the monthly or annual sales may not yet have reached pre-COVID levels. In many other categories, the pre-COVID average sales level have been comfortably exceeded. RBI held its monetary policy meeting on Friday last week and made the announcement that they think India's economy will grow at a rate of 7.2% per annum in 24-25. Earlier, they had estimated this number at 7%. Whether it is 7% or 7.2%, the Indian economy will have achieved a growth rate of more than 7% for 4 years since 2021. So 21-22, 22-23, 23-24, and 24-25, the Indian economy will have achieved 4 consecutive years of growth rate of 7% or more. As we also can see from the bank data, banks are lending for vehicle loans, personal loans, housing loans, and Indian companies are also willing to borrow and invest. Corporate profits are growing at a very healthy rate in the financial year that ended in March this year. The big picture is therefore very good. What is it that you as dealers can do? You support actually both the consumer and the producer. For consumer, you are actually a trusted intermediary. For the producer, you are the marketing channel. You are a sales and distribution channel. So you not only help them plan their inventory, but also provide them very valuable market feedback. Even though your revenues come from the producers, customers trust you to provide them reliable and trustworthy information. This is a conference of finance and insurance of FADA dealers, and both automobile dealership or for that matter, the principle of insurance, both ride on the underlying concept and principle of trust. One of the things that India is considered to be deficient is in trust between people and the government, between people and institutions, between people and intermediaries. A country that is not able to bridge the trust deficit will naturally rely on documentation, paperwork, 2 or 3 levels of attestation, certification, all of which raise operating cost for everyone in the economy. And naturally, the economic growth potential will be lower because much of the compliance cost is a dead weight cost. It doesn't contribute to economic growth. So what can dealers do? You must, even at the expense of short-term sale, be willing to provide information to the public such that their trust in you and in the manufacturer will increase. To manufacturers, you should tell them what the consumers are saying in terms of product reliability, in terms of safety. We know that Indian automobiles, passenger vehicles, do not come on top in the global rankings of passenger safety. It is your responsibility to carry that message that India loses economic growth every year when people die needlessly on the streets of India, on the highways of India, because Indian automobile manufacturers do not take safety as seriously as they should be. The other aspect in which dealers can contribute is also to educate themselves and educate the public on the global climate impact of the purchase decisions that we do as consumers. It is one thing for manufacturers to follow the fashion of the day. The fashion of the day is e-mobility. But e-mobility requires batteries. Batteries require lithium, graphite, etc. Batteries require charging stations. Charging stations require electricity generation. Electricity generation either depends on coal or natural gas, hydroelectricity, hydropower, or nuclear energy, or renewable energy. But to generate renewable energy, we need critical minerals, metals, many of which we import from China. For e-mobility and battery as well, we depend on imports from China. We used to feel very worried about the dependence on imports from Arab nations for crude oil. But we should not be substituting our dependence on Arab nations for crude oil to another country with which India has been having troubled relations. This is an information, this kind of perspectives today we are expected to have. In a normal world, in a peaceful world, automobile dealers may not be expected to be aware of these information. But we are not living in a normal world. Between 1980 and 2015, globalization was running very strong. Global politics was not as divisive, as polarizing, as conflict-ridden as it is today. Climate change was not a big topic in living rooms, drawing rooms, in conferences of leaders, in business conferences, etc. These three factors were not a big threat when China was growing. From 1980 to 2015, they were growing at double-digit rates, almost. When India is now trying to grow, all these three factors have become unfavorable to India. Globalization is slowing down. Global politics is very divided. And climate change is a raging topic. Today, when we talk of climate change, the world expects Indian companies to reduce emissions. The per capita emission of India is one of the lowest in the world. Disclosure related to climate, therefore, should focus on other risks to our businesses. Emission data is important for the developed world, but for India, emission comes slightly lower in priority compared to understanding the impact climate change will have on the economy, on car sales, on the requirements being imposed by the developed world on Indian manufacturers, on banks, on insurance companies. Some of the actions that we take to control or to respond to climate change will also have an impact on the economy, on people's purchasing power. For example, if we increase the price of petrol and diesel by levying a carbon tax, it will make automobiles more expensive to own and to drive. So it's important that all of you understand the risks in the world that we operate today. It is not just about exchanging conferences such as this, or not just about exchanging notes on the latest brands, models, or automobile exhibitions in the developed world, in Switzerland, in Germany, etc. It's important we understand what will drive economic growth in India, what will drive the purchasing power of Indian public, and what will make them own automobiles, two-wheelers or four-wheelers. Therefore, conferences such as this are very important to update our knowledge base, to understand what is happening in the world, and also to ensure, not just ensure, but also ensure that our role in the economy is to be a trusted intermediary for Indian households and for businesses. So that in order to be considered trustworthy, you must be well equipped with information, knowledge, and awareness. That is what will enable you to grow profitably over the long run, for consumers to derive satisfaction from their purchases, and for producers to be able to respond to consumers' expectations. I wish you all the very best in the next 1.5 days of deliberations, exchange of notes, and also an opportunity to reflect on what is going on, not just in the immediate world of automobiles, but also well beyond. Thank you very much, and thank you for listening to me. Wish you all the very best.
Well, thank you so much, Mr. Nageswaran, for your eye-opening and insightful address. And right now, I would like to request our guest of honor, Mr. Rajan Pental, Executive Director, Yes Bank, to address the August gathering. Can we have huge shout out, everyone out here? Thank you.
Thank you so much, sir.
Good afternoon, friends. It's always a great pleasure to be among all the FADA members. You people actually are not only selling mobiles, but you are also, mobility I meant, but you are also mobilizing the economy in a very positive direction. To set the context, if you look at it, the overall car sales, whatever unit of car sales in India, around 4 times of that we sell two-wheelers. And 1/4 of that we sell towards the commercial vehicles. So we have reached that kind of a proportion. When an economy is in the growth era, the growth happens on the mobility of the country, which means the barometer of a growing economy is the number of units being sold. But number of units sold is also dependent on the income levels of the people going, the infrastructure being right, and the right mood in the economy, which also is equally important. Dr. Nageswaran did speak about 7.2% growth. While there are a lot of estimates, and generally now India is not going wrong in any of the estimates we have seen in the last few years, definitely we are moving in that 7 to 8% range, which means that we will remain a a leading economy in terms of not only growth for our country, but also taking the average for the international markets also up. So at a global level, Indian production, Indian growth in economy is going to play a very substantial role. This is one economy which is not just based on the overall turnovers or the units, but also we are the intellectual providers to the country and across the globe. And that brings Indians to a very confident position across the globe, very respectable position across the globe. One good thing which has happened is the Indian intellect which was actually going out and through their research and development creating the results there, and then it used to take a decade's time for that technology to come to India. Today we see practically on real-time basis, we are also growing in the same line. While there are a lot of talks about the development in technology, and people associated with automobiles see it on everyday basis. Somewhere you are looking at the battery-operated cars, somewhere you are looking at the other functionalities, whether it is connectivity or the various other forms of advancement in the automobiles. But advancement is happening actually across. I've been associated with various projects on the most talked about world, which is the AI. It is interesting to see that when you actually want the experts to talk about AI, most of them are actually Indians. They are fellow Indians who are working across the globe. And most of the experiments, because AI still is at an experimentation stage, while there is a blue sky a vision of how it is going to go about, the practical success cases are actually happening in India, whether it is automobiles or it is the banking industry or the the pharmaceutical industry, but a lot of applications are actually at a test base, are actually happening here, which will then get cross-pollinated across the globe. I would like to spend some time as a banker to talk about how the economy we see is going to move and some of the critical points which are essential to be put into mind. And towards the end, I will like to connect how, in my view, it gets connected to the industry which FADA belongs to. So let's look at the macro perspective first. So according to the World Bank, the percentage of Indian population which is aged 15 years and above with a bank account has actually risen from 35% to as close to 80%. This implies that while the financial system has been more successful on the deposit mobilization, but that is not really true for the credit growth in the country, which means that number of individuals who have an access to credit is actually lagging behind in unit terms. Now, this is expected to improve as India heads into the Viksit state by 2047. The era which we all talk about, the era of prosperity, when India is growing to grow exponentially in all fields, with expectation of an all-inclusive growth by 47, and with productive credit penetration made possible, the banking should have attained the adequate maturity in the system. The government at this stage can look towards totally moving away from completely controlling to more system-based control on the environment. So you would have seen a lot of NBFCs had to go out of business because there were some actions which the governance structure found it inappropriate. So instead of directly controlling the financial system, the government would have remote systems at a good governance structure which is evolving with strengthening of technology, strengthening of governance structures, and that will propel the credit growth in the country, which will be more inclusive than what it is today. Let's look at the favorite topic which we all have on our stance on the interest rate. we are seeing that the inflation is having a downtrend. India is aspiring to head towards 4%, which we are kind of trending towards. But it will have two factors to be considered. One is how does the crops behave, particularly the tomato, which becomes the flavor of the season we are into, the rains, the oil prices, and also the international crisis, and not to leave aside how reactionary we would be. We have seen European markets blinking, but that also with a only 0.25% basis. US has given its own stance. Fed has spoken about that they would start looking at it with the inflation trending towards 2%, but at the same time and in the same stance, they also say that they would very closely watch how the inflation is playing out. So Q2, which was the earlier expectation of a cut, in spite of growth being at the center stage of the policymakers, looks like we have to wait for Q3 to Q4 for any change in the interest rates. There would be a very cautious but a calibrated approach which has to balance the growth versus how the inflation is playing out. And I think the central bank has played that role in the last couple of years, wherein instead of taking any popularistic measures, they have stuck to the fundamentals. So which means one of the essence is that for some time the interest rates are going to be at a level where they are. It's important also to understand that when the interest rate starts going down, and we are also talking about its direct impact on the interest rates on the the deposits which the banks take, fixed deposits in particular. So when the interest rates start going down, it takes the system rate to come down little longer. So if you have put a deposit of 2 years, 1 year, whatever period, by the time it gets repriced, it has a lag effect, right? So we are in an era where on one side the corporates are today actually running at 90-95% capacity, and hence there are green shoots. The corporate lending should come, which we have been waiting for the last 3-4 years. But at the same time, while the credit will be available, the interest rates are going to stay high for another 1 year from a customer perspective. What is the banking industry view? The view is that RBI would now have to go from policy to policy to decide on future course of action. The minutes of the MPC meeting also indicate that providing a forward guidance may be difficult, and one would have to guard against any preemptive rate cuts. However, the risks are that the rate cuts start may be shifted later if we again encounter another tomato shock, which I spoke about, or the global data. So these are two important factors which are going to play. The views on the automobile industry. The entire auto industry, including financing, is on the edge of being reformed by new technologies, by new business models, led by connected cars, autonomous vehicles, EVs, ride-sharing concepts, etc. And all this will have an impact on auto financing too. Usage of data sources to different type of customer interactions is going to play an important role, while fixing with various customer prospects and increasing digital lending process. Tomorrow's auto lenders will look much dissimilar than what we are used to of seeing. As the technology in automobiles is changing, mutating, upgrading, so are the financial tools. There is a lot of information today. From an era wherein we used to visit a customer and decide whether we should give a loan, today you are actually bombarded with excess information. Customer doesn't want to move an inch. I saw an ad in the morning from a leading property company, which actually for the first time came with a barcode, and on the barcode you can book a property. So you don't even have to move an inch. There is a video which shows the property and the placing of property. It's all digital. So within 5 minutes, you can actually book a property, which we would have never thought in India. I think in every operation, today the only thing which we have in scarcity is time and patience. So this industry, whether it is selling of cars or financing of cars or insurance of cars, the patience is only going to go down. So it's a time for all of us to evolve and evolve together. RBI's action, how does it impact the auto finance industry? In my view, growth in personal vehicle loans in India still exists at a significant level of around 10%. RBI adopted a contradictory monetary policy by raising the rate of interest to control inflation post-COVID. RBI rate hikes also impacted the cost of ownership and EMI burden on the auto loan takers, which are the borrowers. The cost of deposit have gone back on account of increased credit offtake, thereby reducing the liquidity in the money markets. Many banks today do have pressure on the margins. The Indian banking system has seen the best era after the cleaning up of the books in the last 2 to 3 years. And we have seen some phenomenal results, whether from PSUs or private sector banks or from some NBFCs by virtue of their expanding reach into interior markets with better margins. But with the cost of deposit going up, these margins are actually in the next coming few years are going to be impacted. There would be a downtrend on that. The ROAs will dip, so will be the ROAs. Hence, it is important that the industry, which includes the dealers, the OEMs, and the banks and NBFCs, sit together and think of how to create the value propositions for the customer, which includes a scenario wherein the OEM earns, a dealer earns, and also the banks earn. Today, there is definitely a pressure happening at all the three places, which needs to be looked at. And even after the interest rate goes down, see, I think what pandemic has taught us is how to reduce cost, how to become more effective. Now, these measures which happened 4 years back still, are able to help us to maintain our cost structures. But I think next 1 or 2 years, with the pressure on the margins, we all will have to work towards a reduction in that. Dealership business ahead, in my view, last few months have seen an increase in the stock levels. We still are away from an era to maintain the inventory as well as the actual offtake of the inventory. And there is a mismatch which is building up, which is leading to stocks, and these stocks are getting maintained at a very high interest rates. So whether it is by virtue of creating a digital footprint of reaching to the customers, or by managing your inventory, or a balance between the two, or maybe both, measures really have to be taken care of by the industry. Now, the double whammy is that on one side we are talking about 7 to 8% growth, which is right there. And we can see every sector doing so well, the infrastructure improving, every industry doing so well. So on one side, you cannot stop from creating that growth footprint. But on the other side, I think it needs to be done in a very judicious manner. You have to be conscious of every rupee being spent, now whether it is on the stocks, whether it is on your operations, whether it is in your expansion plan. Watch very carefully where that money leakage is possible. So, couple of months, I would say, stay ahead on your strategies to take place and materialize before you can see any kind of an imbalance. And once that is done, then we are in a good era to grow. Thank you very much. It's always a pleasure. Thank you all the FADA members for calling me here. And I would like to always be attached and closely attached with this fraternity, which is one of the best automobile association in the world. Thank you.
Well, thank you so much, Mr. Pental, for such an enlightening address. And since Mr. Pental has to leave urgently, we would want to thank him for the time he has given us. And right now, we would like to felicitate him, requesting Mr. Singhania, Mr. Sai Girdhar, and Mr. Amar Jatin Seth to felicitate him. With harmonious claps, everyone out here. Thank you. And requesting everyone to join for a group picture. Thank you so much for being with us. And right now, I would like to request Mr. Manish Raj Singhania to present the presidential address.
So, good afternoon, everyone. We had a very enlightening speech by our Chief Economic Advisor, Mr. Nageswaran, and obviously Mr. Rajan Pental. A warm welcome, and though Mr. Nageswaran has not been present here, but he was very much willing, and due to budget constraints and government work, he was not able to join. I definitely thank him for joining online for this enlightening talk. And thanks to Mr. Pental also for throwing light about the auto industry and what we need to take care of and be aware of. And I also extend my warm welcome to Mr. Ramesh Iyer. He has always been a mentor to us. Last Finance and Insurance meet also he was there. And his talk about the coming year is always enlightening, and really, whatever he says, I've always found what he has quoted, that is what has happened in that particular year. So an immense insight we await for his speech. So good afternoon, everyone, esteemed guests, industry leaders, friends and media, and my dear dealer colleagues. I'm delighted to welcome you all to the third Finance and Insurance Summit organized by FADA at Hotel Sahara Star, Mumbai. This summit stands as a manifestation of a commitment to advancing the automotive sector by addressing critical issues and exploring innovative solutions in finance and insurance domain. As Helen Keller said once, alone we can do this, we can do so little, together we can do so much. This encapsulates the essence of our collaboration with finance and insurance partners. The automotive industry is at a cornerstone of economic growth, and its success is intricately linked to the robustness of financial and insurance services, which we use ourselves and also provide to our valuable customers. As we navigate through an era by rapid technological advancements and evolving customer preferences, and the collaboration between auto dealers and financial and insurance partners becomes even more pivotal. Coming to the finance first, few things that we definitely require from the financing industry, starting with standardization of bank delivery orders, something very basic that we have been doing, though it is very much consistent with the NBFCs, but banks really need to standardize delivery orders for ensuring consistency and efficiency, streamlining efficiency, operations and enhancing customer satisfaction. Innovative financial solutions at dealerships can significantly improve the customer experience, making vehicle delivery smoother and more appealing. We need to advocate for bank disbursement and extension of inventory funding tranche period based on dealer recommendations only, rather than OEM insistence, which will foster better dealer-bank relationship, ensuring commissions are directed to employees with the consent of dealer principal only is essential for maintaining ethical standards and operation integrity. Identifying and implementing the best practices at dealerships while addressing areas needing improvement will elevate overall dealership performance. Exploring cross-selling opportunities can boost dealership profitability and offer comprehensive solutions to customers. Analyzing and preparing for the impact of current economic trends on dealership finance will enable us to navigate future challenges effectively. While access to finance has improved since COVID, compliances documentations has increased. Finance companies need to streamline this process without compromising on regulatory requirements. Additionally, finance companies should offer more support, including training and upskilling dealerships' finance personnel to enhance their effectiveness and contribute to dealerships' success. Turning to our other pillar, insurance industry, leveraging customer relationship for effective cross-selling of insurance product has always been a talk, but never completely, totally implemented. That will definitely create additional revenues both for the insurance companies as well as the dealership. We must address the viability of diminishing margins in the insurance sector to sustain profitability. Ensuring proper insurance coverage for registered test drive vehicles is essential to mitigate risk. Amidst changing industry landscapes, retaining revenue in dealerships is critical for sustainability. Evaluating the trade-offs between repair and replacement will help in making cost-effective decisions. Utilizing modern equipment and training can significantly reduce TAT, benefiting both dealers and the customers. Exploring significant business opportunities for insurance companies through umbrella policies can provide comprehensive coverage and streamline processes. Implementing mandatory insurance for all products ensures comprehensive coverage and protection. Enhancing the estimation process increases profitability and trust among stakeholders. It is crucial for insurance companies to improve their claims servicing process to enhance dealer and customer loyalty. Moreover, leveraging digital tools to improve efficiency and convenience of service will greatly benefit our industry. These are very few critical points to address. Bank have been charging foreclosure charges to dealers on the very first year itself. That has been a big point of contention. A certain lock-in period should be there, at least for minimum 1 year. Dealers also should be vigilant about these charges to avoid unnecessary expenses. Finance companies often offer lucrative interest rates initially, but the same changes as the dealer or the organization changes hands or changes bank. So we do seek a certain lock-in period in terms of revision of interest rate on the higher side. Lowering of interest rates are always welcome, but while a dealership changes hand, a certain lock-in period is what is required by the community. Despite frequent discussions on cross-selling, it is rarely implemented effectively. Finance and insurance companies should develop concrete strategies to realize cross-selling potential. Finance companies should provide minimum payouts for direct sourcing too, recognizing the dealership's role in acquiring customers. The practice undermines the integrity of dealership operations and must be addressed immediately. In the words of Mary Barra, CEO of General Motors, the auto industry is on the cusp of transformation. Embracing new technologies and business models is crucial. This highlights the importance of innovative financial and insurance solutions in driving this transformation. Looking globally, we see several best practices in United States. In United States, auto dealerships have successfully integrated digital finance platform. That's what we saw in our recent visit in NADA, reducing processing time and enhancing customer satisfaction. Germany has implemented stringent regulation for ethical practices in dealership financing, ensuring transparency and trust. Japan excels in offering bundled finance and insurance packages, providing customers with comprehensive solutions and boosting dealership profitability. In conclusion, I urge all stakeholders to embrace these insights and work collaboratively to foster a sustainable, profitable, and customer-centric automotive ecosystem. Together, we can drive the industry forward, ensuring growth and resilience in the face of future challenges as we move forward. So, I hope during your visit to this third conference, you get valuable insights and we are able to sit together with finance and insurance company and address common issues and take the auto industry forward. Thank you.
So thank you so much, Mr. Singhania, for such an illuminating presidential address. And now, I would like to invite guest of honor, Mr. Ramesh Iyer, Director, Finance Industry Development Council, FIDC, to address the August gathering with harmonious claps, everyone out here.
Good afternoon, ladies and gentlemen. Good afternoon to all the dignitaries on the dais. First of all, thank you very much for involving me to be the jury of the awards that you are giving. To me, that was really an eye-opener. Extremely impressed with what each one of the dealerships are doing on various fronts. I mean, you know, we all have a very, probably a wrong impression about what the dealers do. We all always think that they just sell some vehicles and that's it about. But to be very honest, when I really went through the program, it was truly eye-opener, whether it's on the digital front, whether it's on the HR front, whether it's on customer retention front, name it in any ways. And since it's a NBFC or a finance and insurance conference, I think the message should be first to the finance companies and insurance companies, then to really the dealerships. I've changed my pattern. I first thought I will speak to the dealer and tell them what we can do. But I think it's time for the finance companies, the bankers, the insurance companies to take a clear note of what the real dealerships do. And this is possible only and only if all of them are willing to travel, meet them at the place of their business, and understand what they are doing. I think the distancing of all these entities who are intermediaries, who are financing and supporting the industry, have distanced themselves from the dealerships and the marketplace. And therefore, their understanding of what's really happening there is going amiss. And therefore, their confidence is going down and their risk-taking ability is going down. I think I would be very categorically want to mention this to every player in the industry, that please restart your travel visit to all these points and you will rediscover yourself and you will rebuild your own confidence. I think that's my first understanding. And I would not have got this understanding if I had not sat through this whole program that I went through the last 2 days. I thought, you know, what are we really going to do types? And we had actually allocated 5 minutes, 7 minutes to each presenter. And believe in me that we had to give them more than double the time, not because they were not prepared, because we became more inquisitive to know why and what are they doing. So thank you so very much for really involving us, and it's truly an eye-opener as far as I'm concerned. I think where is this industry going? I think all of us keep talking about different points of time, and I'm a very strong believer of the fact that these industries will go through these kind of cycles, and we are not a short-term player to run away from it when things go difficult. I think what can our knowledge do is only when things are difficult, then we will be tested for how good we are. And we've been tested several times in the past, both as dealerships, as OEMs, or as even financiers. So I don't think it worries me if there are some inventory going up and all that. I think these are the time where we have to come together and find solutions to this problem rather than become very, very tight on our approaches and offerings. Unfortunately about the finance and banking system is we don't give you money when you actually need, and we force you to take money when you don't need. I think we will have to find a way to come out of that as well. I think these are times where inventory levels are high, and therefore we will have to work together and see how do we really push retails better. If we don't work together and find a solution to do retails better, wrong things will get done in the industry. We have been witness to this experience in the past, and therefore wrong customers will be generated, and then that will lead to future NPA. You will come out of the problem as a dealer, and that's the time a financier will get into problem. And when the going is good, then the financiers will not be available. I think what we all need to do is to work together and find a solution. We have all earned money in the past. It's time to give up some of that earning and come out with such offerings which makes it attractive for customers. We keep talking about interest cost is likely to go up. Let's believe it will remain high for some more time. It's not going to come down in a hurry. I'm sure the earlier speaker said so in as many words. It will at least take another 6 months before the interest rates can come down. And even if it was to come down, it's not going to come down in the same hurry at which it went up. Therefore, it will be a gradual reduction. So let's accept the fact that if interest is going to remain high, what else are we going to do so as to be able to bring down the overall acquisition cost? I think we will all have to work together. The cost of operations will have to come down. Why are you meeting the customer separately? We are meeting the customer separately. Insurance company meeting the customer separately. And we are meeting the same customer for the same end objective. Is there something that the three of us can work together and say, here is a customer available? Can the three of us together meet so that the cost is only one and not three? And that's the only way will this come down. I personally believe this year will have to be an over-concentration on customer. We will have to make sure that the customers are retained, customers remain happy, because let's not forget that the product competition is going to be very, very high. Therefore, the customer loyalty will shift from a product A to product B because no product is less than any other product. No offerings are going to be any different. I mean, can any one of us say that we are the fastest in lending? Everybody is as fast. Can we say we are the cheapest in lending? Maybe I'll drop a rate today, tomorrow someone else drops the rate. So the product price process will not make a difference. Believe in me, product price and process will not make a difference. If there is going to be anything which will make a difference at the marketplace, whether we all like it or not, it is always going to be people who will make the difference. And therefore, all of us as people will have to work together and continue to make the difference for that customer, and we'll have to work with that customer very, very closely. So the first C on which we will all have to work is on customer. We will all have to collectively retain that customer. I heard at the inaugural speech saying that, oh, the customer belongs to us as a dealer. Why? It belongs to you as much as it belongs to us, it as much as belongs to someone else. The customer is only of those entity who gives them the best experience and the best service, and not someone who's just sold the product or someone who's just given them the finance. We will have to retain the customer. We will have to make sure the customer feels respected. This debate has always been there, that is because you sell the vehicle we are able to finance, or is it because we are able to finance you are able to sell the vehicle? Why do we even want to solve this debate? I don't even have a doubt in my mind that finance companies and bankers survive only because you sell the vehicle. Otherwise, what would they do? They would not do. When you don't sell the vehicle, we go out and do personal loans. That is proof enough that it's because of the dealership that the financiers survive. I think the financiers will have to accept this fact The dealerships are the ones who provide us the business and will have to provide you that respect and therefore be your partner. And I think it is equally therefore important that the dealership along with the financiers understand the same respect is that end customer expecting. I don't think today we can bet on loyalty to say, oh, he's taken from me last 10 vehicles, the 11th vehicle he will automatically take from me. It will not happen. It will not happen. He will have to be given the respect to believe that the 11th vehicle is being treated exactly like you treated him for the first vehicle. That's exactly what he is looking for. And that leads me to believe that all of us will have to be solution providers and not product providers. We will all have to become solution provider. Unless we provide solution to customers, I'm afraid that we will not be able to expand this market. I think come festival season, my personal belief, we will have buoyancy in the market. Everything is going to go right for us. If the monsoon predictions are right, I think the monsoon cash flow will support the growth. The infrastructure growth is not going to slow down. Infrastructure growth will pick up. It will continue. And therefore, if these two cash flows support the market, why will the growth not return? I think let's not become over fussy about what we are seeing today, but let's become over conscious of what is likely to happen tomorrow. I would very strongly urge that let's plan for tomorrow instead of overspending time on what's happening today. Yes, the inventory levels are high. It will come down. For sure, it will come down. But we will all, again and again, I'm saying we will all have to work together. And therefore, the third C that I want to bet on is a collaborative working. So retain customer as the first C. Focus on your cost collectively to see how can we bring down the cost of operations to retain the margin and then work collaboratively together to be able to make a difference at the marketplace. I think these are the only things that I would suggest that we should all be focusing on, which will take us to that next level. I think Manish touched on that. It is super important that when these kind of situations come, that we work with absolute transparency and integrity. We can't be working against each other's interest. Yes, there will be some misgivings which will happen, but we have seen it in the past when these kind of levels of inventory, etc. starts to build, impatience comes into the marketplace and people somewhere tend to do wrong things. And in today's scenario, if we are going to be seen doing something wrong, I think that particular entity or individuals will definitely not get the support, but unfortunately even the industry will get tainted. I think these are going to be years of extreme high regulatory framework. I think if we look at finance industry, the regulator has been announcing new regulations so many times, and it's for good reasons. It's for good reasons. But then when regulator expects you to be highly regulated in a very controlled environment, in a very highly compliance environment, it is expected that we all work together for the right of what the industry expects and what the regulator expects. I think therefore transparency is going to be super important. If you have a problem, it's important that you come forward and have a discussion with the financier and we find a solution to the problem rather than keeping the problem hidden and then it bursts on our face one day. And same is true with the financiers. If you do have a problem with any dealerships or any dealership outlet, it's probably good to go back to the dealer and have this frank discussion and sort out the problem rather than work against the problem and create more problems for ourselves. But this can only happen when the decision makers are able to travel and meet the dealership and maintain that relationship. I am not against data and digitization, but unfortunately, if everyone is going to overbet on data and digitization and move away from knowledge and relationship, I think we are going nowhere. I don't think we can keep the knowledge and relationship away and can only bet on data and digitization as the solution of tomorrow. I mean, our professions are like medical profession. Imagine your doctor that he has no knowledge of a problem, but he knows to only read the pathology report. How will you treat you? It's exactly the situation that we will all be in. If you don't have the knowledge of what's the reality of the marketplace, if you don't have the understanding of what the customer expectations are, and then we only depend on certain data and believe that this is a reality, I think we could end up making wrong mistakes. I think we've done these mistakes in the past. My request would be that for heaven's sake, not just the financiers, even the dealership and dealer sales team have to undertake substantial travel onto the ground and come back with the knowledge, and we will all have to find a way. How does this knowledge and data speak together and provide that ultimate good for all of us? It's extremely, extremely important. And my last comment would be, all of us together are trying to create a lot of impact in the marketplace. We want to truly create that positive impact in the marketplace. But have we ever thought, what does this word impact really mean? I was just thinking for myself, what does this word impact mean? All of us keep saying all the time. And I've just coined for myself an expansion to this impact word through alphabetically. The I stands for integrity. I think if you have to truly create an impact, we will have to be high on our integrity. The M stands for the mannerism, which means we have to respect everyone in the system. If you have that mannerism, then you definitely create the impact. The P stands for the passion. We will all have to do things absolutely passionately. We cannot do anything half-heartedly. The A stands for the attitude. We all must have a positive attitude under all circumstances. We just cannot have negative mindset. The C stands for the communication. We will all have to have the transparent communication. And I think the T stands for trust and the teamwork. We will all have to work together, and we'll all have to trust each other and work together. I think if you look at this, if we have these qualities in what we are trying to do, I have no doubts in my mind that we can collectively create phenomenal impact on the ground. I think that's what I am looking for, and that's what I'm sure all of us are looking for. I think on behalf of the industry, I can assure you that we all have growth aspiration. We all are adequately capitalized. Our ability to raise funds are phenomenally high, and we are all hungry for growth. I think we will support you in every way in your growth. You put in your best effort, create all that is required by the customer. Let's work together and make it a great success. Thank you so much for inviting me. Good luck and all the very, very best. God bless.
Well, thank you so much, Mr. Iyer, for such an edifying address. Well, now, I would like to request Mr. Sachin Mahajan, State Chairperson, FADA, to come on the dais and present the vote of thanks. Can we have thunderous applauses?
So, ladies and gentlemen, we'll soon have a tea break. I'm sure you can lend me your ears for a few moments. After two wonderful, inspiring speeches, thank you, Iyer sir. Pental sir has just moved out for his commitments. So, sir, it is always very, very inspiring to hear you out. It's all about normal human behavior that you speak of. Apart from the big jargons of finance and the numbers and statistics, you always teach about relationships. And it is a fact, however digital we may try to move on to, there will always be a phygital presence. In spite of that digital thing, you will always want to go and shake hands, say hello to each other, and know about each other's problems. So thank you, sir. Last year you spoke, I still remember the speech. There is always some good takeaway after hearing you. It is about the 3 C's. This year, I'm going to surely write out in big letters the full form of impact. Thank you very much, sir. Amar bhai spoke about statistics. Manish bhai spoke about the condition of our industry. Sir, at the end of the day, we are businessmen. हम व्यापार करते हैं. तो बड़ी संक्षिप्त में आपको बोलना चाहूँगा, एक डीलर प्रिंसिपल के नज़रिए से, in spite of moving ahead of the unprecedented COVID situation, we still have not come out of it fully. As Mr. Pental said that 4-wheelers, 2-wheelers, commercials, he gave some statistics. Commercials are 1/4 of passenger vehicles. 2-wheelers are 4 times of the passenger vehicles. So, sir, I would like to, Iyer, sir, I would like your attention, please. I would like you to sensitize the finance fraternity on certain points. COVID के बाद अभी भी हम उभरे नहीं हैं. There are certain issues. When you talk about the 2-wheeler segment, there is nobody you can find who will have a very, very clean CIBIL. If he has a clean CIBIL, he does not want to come to you. He has his captive banking. So, वो जो एक gap है, there is something which is wrong in the housing loan, in the gold loan, in the 2-wheeler loan, some sort of smaller loans. So how to bridge this gap, looking at the festive season that is coming over, we would certainly like people like you to give some inputs on this. Situation hasn't changed much. We all are chasing figures, we all are chasing numbers, but at the end of the day, you cannot run away from the reality. Finance and insurance are two such pillars of this auto retail industry जिनके बगैर हम काम नहीं कर सकते. So बहुत बहुत धन्यवाद. आप हर बार आते हो FADA के इस फेडरेशन के हमारे छोटे मोटे फंक्शंस में, मीटिंग्स में. You come, you talk, you understand our sentiments. Sir, FADA is all about teaching and learning. हमेशा कुछ सीखने को मिलता है, हमारे डीलर भाइयों से भी मिलता है. महाराष्ट्र के कोने से किस जिले से 6 2-wheeler डीलर्स आए हुए हैं. They want to come here, they want to listen. They are sitting there right in front of me. So the lady sitting over there runs a dealership, and she runs a dealership which has salespeople who are saleswomen who handle the showroom, service handled by women, and she runs the entire dealership. So these are the kind of members we have in FADA. We have a lot of strength, female strength, and they are not the wives of DPs, but they are the dealer principals who run the dealerships on their own selves. Sir, we conduct these dealership surveys. It is not about only our grievance being heard, but we would like to communicate to you the sentiments regarding the finance structures, regarding the finance companies, as well as the insurance companies. Regarding the Dealers Excellence Awards, Amar bhai who looks after this, Amar bhai, congratulations to you. एक डीलर भाई ने हमारे बहुत गाली दी कि मेरा नॉमिनेशन अवार्ड के लिए कंसिडर नहीं हुआ है. So this is some sort of an achievement. There is some excitement कि मेरा nomination लिया नहीं गया है. So we are happy about it. All of you people travel all the way along, attend the jury, make your presentations. There are certain groups who are a little bit unhappy that their nominations, they had filed in 4 categories, but only 1 category could be heard of. I promise you, we are looking through this. This dealer award structure is totally looked after by Premunetia. It is a faceless operation. FADA, the members of FADA or the office bearers of FADA do not have any role in deciding about the awards. It is a 100% unbiased decision done by this agency, Premunetia. So you can trust us. Every year, it is a learning experience. Last year, the numbers were a little bit less. This year, the numbers have doubled up. And there were phone calls from a lot of dealers to let them participate in this awards after the last date. We will surely start the process. Amar bhai and we discussed that we have to start this process, Amar bhai, at least 3 to 4 months before, because there are so many people who have good practices and they want the dealer fraternity to know about it. So congratulations to you, congratulations to us, congratulations to the entire FADA fraternity. Thank you very much. Dear dealer friends, you have traveled all across this country and come here to witness this award ceremony. I am sure we are going to have a fantastic ceremony in the evening and networking session. So friends, 2 महीने तो हमारे गए, हम सारे भाई लोग चुनाव के महोत्सव में बिजी थे. धंधा करने का अब टाइम आ गया है. Let's focus. Let's concentrate on our business. FADA is here to assist you in whichever way you want. Thank you very much. Jai Hind, Jai Maharashtra.
Well, thank you so much, Mr. Sachin Mahajan, for such a warm and wondrous vote of thanks. And now it's time for felicitation. And I would like to request Mr. Singhania, Mr. Sai Girdhar, and Mr. Sheth to felicitate Mr. Ramesh Iyer. Harmonious claps. Thank you so much, everyone.